Well, Shree Cement posted a rather disappointing quarter in the second quarter. The miss on revenues, EBITDA, as well as on the margin front. Well, the volumes were in line, but the problem is the mix turned unfavorable, with clinker sales moving much higher than what we saw in the prior quarters. To add to their woes, well, realizations as well did see a sharper than expected contraction on the realization front. Well, to understand how was the past quarter and what's the way ahead, we're joined by Mr. H.M. Bangur, Chairman of the company. Hi, Mr. Bangur. Thanks so much for joining in. Well, clearly it was a difficult quarter, but the street is baking in that the second half of this year is going to be much better. If you could give us a sense on the cost front, first of all, that's clearly spiked up in the past quarter. Now, in quarter three, what can be the reduction on the cost side? That's on a per ton basis. And also, there have been some price increases, I understand, in the last 2 to 3 weeks. What is the quantum of that price increase?
In the coming quarter, the third quarter, prices or the cost will come down only a little, not much. Things will start correcting from later quarter. That is January, March quarter.
Okay, Mr. Bangur, I think we can't hear you very well. Go ahead.
Go ahead, sir.
Prices will be increasing when the natural demand will come. Right now, it should be after November 15 or so, the demand should be good. First half of the quarter is good monsoon, so that will have the good result in the year end, but not immediately. Immediately, the sales is little affected. Festive season is there. So we expect very good results from mid-November onwards. Right now, the costing also should decrease from December because the old stocks of coal are there with almost everyone. So I expect this quarter to be little better than the last quarter, but January, March should be a good quarter.
What would little better be, sir? If you could give us in the EBITDA per ton front, multi-quarter low at around 700 rupees. We are used to seeing Shree Cement doing a EBITDA per ton of 1,400-1,500 rupees. How much better can it get? If going by current reckoning, can it go to around 1,000 rupees per ton at least, EBITDA per ton?
Yes, I was also going to say the same. It should be around 900 to 1,000, something in between. This is what I am expecting at this point of time.
Okay, 900 to 1,000 rupees EBITDA per ton. Mr. Bangur, good morning and thanks for being with us. Just a little more color on how the demand situation is, because we are seeing a pickup in infrastructure activity. Government capex has come back. Real estate is back in a big way. Earlier, I think you had guided for an 8 to 10% volume growth by the end of FY23. Do you stick to that, or do you think you can do better?
No, I stick to that. In the first half, our volume growth is around 13%. Okay. So we expect 12 to 13% growth, but a little bit conservative. So I am saying 10%.
Okay. Mr. Bangur, in terms of prices, can you tell us what has happened to pricing in this quarter so far? And you said post the festive season demand, the second half of the quarter should be better. What can we expect in terms of pricing then in the second half? Yeah.
In the second half, the pricing should be up by, on an average, about 200 rupees a ton. That is what is expected. And the second thing is the cost will come down a little. That is otherwise in commodity, it can always be 10 days earlier also.
So you're saying that the second half pricing will be 200 rupees higher than the first half pricing, right, sir?
No, I mean selling price.
Selling price per ton. Yeah, that's okay.
And the costing should be a little lower.
Okay.
So margin should increase from 700 to 1,000 rupees.
1,000 rupees, that's for quarter three, and you're hoping quarter four will be even better.
Of course.
Okay, all right. We'll get back to the operational aspects. But Mr. Bangur, the street wants to know, what are you looking at? The last time we had a brief chat, you said that there was some, reaching out to, say, the managements of India Cements or Sanghi, but they were not willing sellers. Have you made a reattempt out there to any of these two?
We will revisit the whole thing. We have just taken Mr. Akhori as the MD of the company. So we will look at the whole thing from the new angle.
Okay, so you are interested in some assets, and when do you plan to revisit this? Anything in this fiscal year itself?
When you want to, when I am saying revisit, if I say something now, it is not revisiting.
Okay. Specifically, are you interested in JP assets?
No, we will revisit the whole thing, understand from the new angle what should be good for us, because right now, if we have a senior person with his team, they will also look at the things in a totally new angle.
And that's right.
New way of looking.
That's right, Mr. Bangur, but you would have some indication, right? JP Assets, 10 million tons is on offer. Are you looking at that? Have you had a brief look at that? And also the other asset I want to ask you is, because you have a good exposure, in Rajasthan. There are reports that suggest that India Cements is looking to sell their 1.5 million ton plant. Interested there?
We have not yet come to know that India Cement is interested in selling the unit. They have only sold the one mining asset, one lease land in Madhya Pradesh. That's all they have sold. And JP assets, we are not looking. We looked at it. Somehow we found it is too much clutter for us. It is in Bhilai, where in Chhattisgarh we have a lot of capacity, so it doesn't suit our purpose.
Okay, so it doesn't suit, you're not looking at JP assets for sure, but India Cements maybe, may not be, we'll get to know, perhaps time will tell. Are you in conversation with them?
Not saying anything.
No, but are you talking to them?
No, I am not saying anything at right.
Okay, sir, tell us then about your incremental capacity. I mean, how much are you planning to put on stream in FY23, and what will this take your total capacity to?
Right now, we have 3 projects which are working, which are on creation mode. One is Purulia, which should be completed by March this year. So, in the second half of March, the capacity of 2 million tons should come into production.
Okay.
So that is the grinding unit. The other thing is Navalgarh unit, which is about 1 year from now.
Okay.
It is a big unit, 4 million ton clinkerization unit, which should be on stream in 1 year. And the third is Guntur. We have started in Andhra.
Okay.
1.5 million ton capacity.
Okay, all right. Mr. Bangur, very quickly, you mentioned about Mr. Neeraj Akuri coming on board, and the street was betting on him turning around things in his previous avatar. Now he is with you, and clearly the street will be hoping some things change as well for you. I'm looking at an Axis Capital note, and they say that as of now, Shree Cement's realization is a little lower in comparison to, say, Ultratech as well as Ambuja by around 4% odd. Will you be looking at bridging this gap? Is that one of the factors on your agenda?
Yes, our factor is to bridge the gap, the realization gap, as well as to increase the capacity utilization. So in the marketing side, two-pronged attack will be there. One, to improve the realization, and the second is to increase the capacity utilization.